Okay, so this is my first podcast. I'm Michael. I haven't come up with a name for my podcast yet, but I'm with Jonathan Orantes, who has inspired me to do this podcast, and he works for Frontline Home Loans. So he's a mortgage broker, and as far as my social circle, he's the one that knows the most about home loans and how to get home loans. Um, so he's somebody good to talk to if you're a first-time home buyer to a fifth-time home buyer. And I just wanted to give everybody insight by talking to him. Some of the questions that I had for Jonathan, I wanted to talk to him a little bit about the housing market today. What does it look like? How difficult is it to buy a house right now? Or is it easy to buy a house? Those are some questions I have.
Housing market today. So the housing market today is a standstill currently. Not a standstill. 30 to 60 days, houses on markets. So what that means is anybody in the market right now has negotiating power.
Okay. So anybody in the market right now has negotiating power. So that's a buyer's market.
Buyer's market, correct? Because there's no need to overbid. There's a lot of ways to get seller concessions. And did you hear about the new rule with NAR?
With what was that?
That how the real estate agents get paid now has changed.
No, I haven't. What is that called?
NAR, that's the National Association of Real Estate. So they got
NAR?
Yeah, they got sued. So you bought a house before, right?
Right.
You remember how your agent got paid?
They got commission, I'm assuming.
Correct. Had nothing to do with you, right?
Okay.
Yeah. The seller always used to pay back in the day. Standard was 3%, 6%, 3% would go to each party.
Okay.
So that's all changed now. So now when you buy a house, the first thing the real estate agent is gonna hand you is a paper saying you're gonna pay me this amount of money when I help you get this home.
Also, they can set their commission prices now.
Correct. They have to.
Okay.
Because it's not guaranteed the seller's gonna pay the commission.
Okay.
So that all changed this last couple of months. So everybody's been nervous about that. Not sure if that's really had a factor to slowing down the market. Because what I'm seeing right now, everything's kind of business as usual. We're still having to sign that paper, but for the most part, people are still paying commission 5 to 6% when the house goes on the market. It gets split between the parties. But that's what has changed.
So, in theory, if that does affect the market, how would it affect the market?
So when it becomes a seller's market, so imagine a seller's market now, right? Right now, it's competitive. So people are still putting 5 to 6% in the Houston market to pay for commission when the house sells.
Okay.
If it's a seller's market, what's gonna happen is I'm gonna hire this agent. I'm gonna tell the agent I'm gonna pay you your 3%. The buyer got to figure out how they're gonna pay their agent.
I see.
Because it's a busy market.
Right.
So at that point, you don't have to worry about paying somebody else's agent because everybody wants your house. Remember 2 years ago how people were overbidding?
Right.
This would just be a new way around that rule.
Okay.
Correct. So in your experience, you don't know how your agent got paid.
Right.
You just know he got paid. And this experience, and you bought in what year?
It's I think 2021.
So that was during the COVID era, right?
Right.
People were busy, and then there was people overbidding.
Right.
Yeah. So if you were to buy in the say it was a COVID year again, and this rule was active, chances are you would have paid your agent because people were trying to get the most out of their money. So they were gonna anything they could cut, they would have cut.
Oh, okay.
So at that point, when your agent sold the house, either A, the buyer's gonna buy it, give you the cut, but they didn't want to do it right. So what's the other option? You can B, ask for a seller concession. You can do that now as normal, but now with a seller concession, instead of going towards you to help you pay less at closing, that money would be used to pay your agent.
Interesting.
All right.
Okay.
Or C, there's no seller concession. That price of the house is $300K, and that's what it is. I'm not giving you no money back. I'm only paying my agent. You got to pay your agent. C, you're gonna have to figure out how to pay your agent, whether it's 3% or a set amount.
Got it.
Yeah, it became active about a couple months ago.
Oh, okay. So it's a new law that has passed.
Yeah,
but
that's how the market is right now.
Okay,
So.
but not enough time has passed to see.
Correct, to see if it's effective. Right now, the interest rates are still in the high 6s, mid 6s. So it hasn't had a flood of people running into the market. Interest rate right now is in the sixes, 6.5, 6.7 right now. You can always buy the points down. There's always a possibility to get a 5% rate.
Okay.
But let's say you want to get an interest, you go and get an interest rate right now, and you don't want to pay for the points. You just want just the rate.
So Jonathan mentioning that the interest rate is 6% right now. I think I'm not sure, but are you still dealing with people with the COVID mentality, thinking that they can get a COVID rate like 2%?
No, yeah.
People are aware that you can't get that.
Correct. Correct. They understand, but that's why we don't have many buyers. Right now, the buyers I deal with at this point are in the right point of their lives. They know they can buy a house because they make a sufficient amount of money. Always have a home consultation. I want to understand what they got to pay out of pocket and what they can afford to be their monthly budget.
Okay.
I mean, ideally, I can push if a house is a $2,000 payment and you only make $4,000 a month. I can push your budget at 50%, right? Meaning your DTI will be 50% of it. But that's not really the best way to buy a house these days. I mean, to be in your budget, you want to be around 30% budget. Meaning, if you make $4,000 a month, you don't want a $2,000 payment. You want maybe like $1,500 payment.
Monthly out of your monthly expenses on bills.
Yeah. Well, what you come in, what you bring in, and then what your monthly housing expenses.
Oh.
Yeah, that's what that is, right?
Yeah.
So if you only make $4,000 a month and the house payment is going to be $3,000, that's 75% of your debt to income. But they're not going to give you that. That's a risk.
Oh, okay.
Because I mean, how are you going to live paying just a house?
Oh.
Yeah, like right now, what I'm seeing is people with absurd car payments. I mean, if you have a $1,500 car payment, that means you can buy even less of a house.
Okay.
Because that goes against you. Yeah, student loans is another big thing. Student loans isn't too bad. I mean, maybe some people have like 20K worth of student loans they owe. So if your minimum monthly payment on your student loans is $200 a month, then that comes off of your debt. Credit cards are usually easy. There's ways to maneuver around it, balance transfers, things like that. So credit cards, I see people with credit card debt, those are easy to work with. We just gotta move some things around.
Oh, okay. Yeah, I mean that's interesting too because in a way, when I was dealing with the mortgage broker on my side, in a way it was like having a free financial consultant because the mortgage broker was telling me how to get my debt down. So if you need to pay down credit card debt, they will tell you need to pay down your credit card debt before we can get this process going to get that house.
Because everything, like a credit card debt, what we look at is not the huge amount of credit card debt you have. What we look at is that minimum monthly payment you make.
On the debt.
Yeah, because people, some people have big.
So it's the minimum monthly payment. So if they have debt and regardless of how much that debt is in total, what mortgage brokers look at is how much they're paying monthly.
Yeah, the minimum. I mean, you can't have 100K worth of credit card debt either. But if you're within the normal like 10 to 20K, it's not really a big deal. We're looking at it as a minimum payment because that's what affects you.
Right.
So some people have ongoing payments and they pay big amounts, but we don't care about the big amounts. It's always that minimum that takes off of your debt to income.
Got it. Yeah. And if it was $1,000 or $2,000 debt payment, like that's like mortgage payment. That's a lot of money. That's like $200,000.
Yeah.
If you're paying like $2,000 a month.
Correct. That's how much value power you lose.
Oh, okay.
Yeah.
Okay.
Yeah.
So I mean, I got a lot of questions to branch off of that one. So with that being said, how can somebody buy a house? So let's say somebody makes $40,000 a year and they cleaned up their debt. They got zero debt and they're making $40,000 a year. What kind of house can they get and do they qualify and what do they need?
You qualify. So $40K a year. You're gonna be in the Houston area, around 160, 70K home you can buy for that. And you have zero debt. Your car's paid off, no credit card debt, no student loans. You make $40,000 a year, you've been at your job for 2 years making $40,000 a year.
So, okay, 2 years at your job, making $40,000 a year, you qualify for no debt.
Yeah.
You qualify for a house that costs $160,000 to $170,000.
Yeah. And all that changes, right? So it depends what part of Houston you move in, because if your taxes are high, it's less. If your taxes are low, you can buy a more expensive home.
Oh,
You qualify for this home because that goes into your monthly. That goes into your DTI.
okay.
When we calculate DTI, we calculate the house payment, the interest, the private mortgage insurance, your home insurance, and your taxes.
And your taxes.
Your taxes, that goes into the payment because there's no way you can live here without paying taxes every year.
Right, but there's also like to pull out a house loan. By law, they require you to have homeowners insurance.
Correct, homeowners
And what was the other one?
private mortgage insurance.
Private
Yeah.
mortgage insurance.
So that's just a fee they charge, but it's supposed to help if people default on the house. But you can avoid that by getting a conventional loan or an FHA. You're paying 20% down.
Okay, but the traditional loan requires that
If you put less than 20% down, you're paying PMI guaranteed.
less than 20% down.
Yeah.
So I don't know. You got to do the math. 20% on $170,000 home. Okay,
$38,000.
$38,000 would be a 20% down payment on $170,000 house.
Correct.
Okay.
This is a down payment. There's still closing costs. Closing costs on that home, on a 170K home, probably an additional 7K, give or take.
Right.
So 38, about 45K to close if there was no seller concessions.
Right.
And then he can avoid PMI.
I do want to point out and give motivation to those people that are making $40,000 a year. You can get out of debt. I want to point out when I got this house, another big reason why I got this house is that I was living with in-laws, and that allowed me to only pay them $250 a month.
Pay down your bills.
Yeah, so I had to sacrifice and live with people and share space.
Yeah.
But that's
looking back at it now, was it worth it?
Yeah, and I knew it was worth it at the time. It was hard, I'm not gonna lie, but that's how you get it out the mud, I think.
Yeah. You gotta get creative. Yeah.
Get creative with it. So don't get discouraged if you're making 40K, because there is a way. When there's a will, there's a way.
Yeah. No, I mean we have borrowers get qualified 40K. I had a person get qualified a couple months ago in Rosenberg. They bought a home in the 1940s. Was livable, obviously. That's the only way I can give out a loan if it's a livable, habitable home.
Oh, okay.
And she had like a good 7,000 square feet land plot. She was happy making her what she was making.
Yeah.
Being able to afford that, had her own home. It was a fixer upper. But with her, her main thing, she wanted low down payment. We were getting her on a down payment assistance program. So on a home like that with a down payment assistance program and a few seller concessions, she was able to get in at 9K total.
So she had $9,000 up front.
Yeah, 9K. That covered everything, down payment, closing costs.
And what was the total cost of this property?
This property was 148.
148. And how much did she make a year?
47K.
47K.
Yeah.
And she got property worth
148.
148,000.
And then she had debt. She had a car loan. And I think she had a few credit cards. But yeah, I mean so she was able to qualify and get her home. Yeah.
I want to point that out too. You don't necessarily have to be at zero debt. You just have to have a low.
But zero debt's always better.
Yeah, zero debt. That gives you more buying power.
Yeah, right. Buying power. Yeah.
Whenever you talk about property taxes, and I'm talking about Houston specifically, what areas of Houston have high taxes?
Katy.
Katy has high taxes.
Yeah, when you go to the Katy area, that's the highest I've seen. Like if your house is worth 300K in Katy, you pay about 3.3% of property taxes. What that means is every year you're paying about $10,000 a year in property taxes.
Oh, in Katy, $10,000 a year in property taxes in Katy on a $300,000 property.
So you go somewhere like inside the city, like near the Heights area. Yeah, so when you're inside the Houston area, depending on the area, near the Heights though, I know around that area, the property taxes are 2.1%.
Property taxes in the Heights are 2.1%?
Yeah, in the Highland Heights area. So now imagine a 300K home, right?
Okay.
In Katy, you're paying 10,000. In Houston, you're only paying 6,300.
So property taxes in the city of Houston is lower than the suburbs.
It all depends on areas, but yeah, for the most part, that's how it works. Suburbs is a little bit more, majority of the time, but there is pockets where it be less.
I mean, it's kind of off topic, but what are the reasons for that?
The property taxes?
Why
It's
are
just
they
the way.
lower in Houston as compared to Katy?
I think it's just the way they set up the municipality. I don't know the details of it, but I mean, you can tell, right? In Katy, you pay high property taxes, but Katy's always been a place where you knew you were going to pay a little bit more. Houston, for the most part, I mean, it's a bigger city, so I know you just pay low taxes there. I know I've seen pockets where it is more, so it's hard to tell you. It's not one set area, but it's sometimes maybe neighborhoods to do with it. I know where I live in Richmond, it's about 3.1. Um, so, Katy is slightly higher, but I know there it started at 2.9 and it gradually went up over time.
And when we're talking about Katy, we're talking about all of Katy, even the older Katy or the newer Katy?
No, so the Houston Katy, I had another property person, Katy, think of I-10 and, not Fry, above Fry. Bakerside,
Parker Cypress,
Cypress.
I-10.
Yeah.
That's the older Katy.
That's older Katy, yeah. So property taxes there are 2.3 because they're Katy school district, but they're considered Houston.
Oh, okay.
Yeah.
And then we start going deeper into 99. To me, that's the newer Katy.
Correct, and those are 3.4, 3.5 property taxes.
Yeah. You got a lot more access to, to commercial businesses. Out there in 99, some of those houses are isolated.
Correct. That's another thing, yeah, because you got business paying city Houston. Out there, you don't.
Right.
And Katy does have they're really big on schools, so I think that part of it is a bigger percentage for their schools in Katy.
Being a good school district.
Yeah.
Okay.
Yeah.
So, that something to think about, school districts too, when it comes to families.
Yeah, I don't know if you noticed, but there's a lot of charter schools around here too.
Charter schools.
So those are basically free public schools. So yeah.
Oh, okay.
Yeah, but I mean, even me, I lived in the area where the kid doesn't go to the same school district. Well, you do what you gotta do, but I always think it's better to be in the school district.
Okay.
Especially if you got a kid, that's just a sacrifice you make.
The demographic I was talking to is kind of like me, somebody with a family and a kid. So there's probably a whole nother concept to think about for single people, and where they want to live.
Yeah, those are city folks. They don't care about school district. They want to be next to the city. Those people are the ones that want to not drive.
Oh, right,
yeah,
right.
If you live in the suburbs, you have to have a car.
Yeah, you have to have a car. Like, when it comes to city tax and school districts, I don't think it matters so much for the single person.
Yeah.
But I think we have a lot of information, and I think we need to do more podcasts.
Yeah, we can visit some subjects, get some questions. I'm always happy to answer some questions for the audience.
Right, yeah. So,
Give us a topic to go over.
Yeah. So this is my first podcast, and I want to keep doing more and bring Jonathan on so we can talk about different subjects. And if you could put a specific question that you would like answered, we can talk about it here, and we can give you Jonathan's contact number if you're interested in buying a home. Because even if if you feel like you're not financially ready now, it's still okay to reach out to him, and he can guide you to the point of you are ready to buy.
Yeah, and that's the biggest thing. Planning ahead just makes it a whole easy process instead of trying to do it last minute. Because people try to come like 3 months before their rent's over, and then I pull credit. I find out about something. We got to clean up your credit cards. The reports take a month each time.
Right.
So if we do it 6-9 months ahead of time, it's just a smoother process.
Right.
Jonathan,
Okay.
if they want to reach out to you, how can they reach
I
out?
gotta think of a name for this podcast.
Give you my link, you can post it on there, or the Long Guru, Jonathan _Long Guru at Instagram.
Okay.
Yeah, I'm really great. Once you get my link, we can link up. We can see where we go from there.